Elon Musk to become Twitter's new CEO, and Multiply Group sees $2.53 billion in Q3 net profit. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Elon Musk will become Twitter's new CEO after he took over the social media platform and fired its former CEO, its CFO, and other top staff. He had accused them of misleading him and Twitter investors over the number of fake accounts on the platform. Musk will also reverse bans that prevented people like former President Trump from using the platform. He says he didn't buy Twitter to make more money, but to, quote, try to help humanity whom I love. Over $200 billion in U.S. stock market value went up in smoke in extended trade last night after a weak forecast from Amazon added to a string of downbeat quarterly reports from big tech. Amazon stock tumbled 17% after the bell, wiping out $190 billion in market cap after it projected a holiday sales slump. Also after the bell, Apple shares fell about 1%, erasing $30 billion of its stock market value after it reported iPhone sales that fell short of Wall Street targets. Meanwhile, Meta shares sank 20% after its costly metaverse bets and the impact of soaring inflation on ad spending spooked investors. Meta was set to lose about $78 billion in market value, adding to the trillions of dollars that some of the biggest tech names have shed this year amid rising interest rates and a stronger dollar. Meta has lost more than $500 billion in market value so far in 2022. Its shares were trading at $100.55, their lowest since February 2016. And this is reflected in today's Forbes Real-Time Billionaires ranking, which tracks the daily ups and downs of the world's richest people. Our biggest loser today is, in fact, Mark Zuckerberg, down $11.1 billion overnight with net wealth of $36 billion. Our second biggest loser today is Jeff Bezos, down $4.7 billion overnight with net wealth of $134.4 billion. And our third place loser is Chinese electric vehicle battery mogul Robin Zhang, down $2.2 billion with net wealth of $29.8 billion. Check out our website and our social media for all of the latest billionaires news. Closer to home, Abu Dhabi-based investment holding company Multiply Group saw $2.53 billion in net profit for Q3 as it continued to deliver strong performance across its investments and subsidiaries. Q3 revenue reached $77.3 million and a gross margin of $37.75 million. The group's subsidiaries grew by 67% in revenue and profitability year on year. Meanwhile, investment and other income came in at $2.52 billion, driven by the strong performance of both the group's portfolio and local financial markets. Bayan, a geospatial and data analytics company owned by Abu Dhabi's G42, attracted $15.7 billion in its IPO, implying an oversubscription of 379 times. The IPO price was set at 30 cents per ordinary share, with the total value of the offer shares equaling $628.6 million. This is equivalent to 22.22% of Bayanat's share capital. Bayanat shares will trade on the Abu Dhabi Securities Exchange on October 31st. G42 will continue to hold a 77% stake in Bayanat. Dubai Aerospace Enterprise has filed a London lawsuit against 11 insurers, including Abu Dhabi National Insurance Company, Lloyd's of London, AIG, Chubb, and Swiss Re. It comes 2 months after it wrote off almost $600 million for 19 aircraft stuck in Russia. Lessors have vowed to pursue insurance since losing control of more than 400 leased planes worth almost $10 billion after Western countries sanctioned Russia and Moscow blocked the jets from leaving. The IMF cut Asia's economic forecast today as global monetary tightening, rising inflation, and China's sharp slowdown dampened the region's recovery prospects. The IMF says while inflation in Asia remains subdued compared with other regions, most central banks must continue raising interest rates to ensure that inflation returns to target and remains well anchored. The IMF cut Asia's growth forecast to 4% this year, down 0.9 percentage points, and to 4.3% next year, down 0.8 points. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.